Today's episode is going to be a super quick one. We're going to take a look at 5 stocks that you should keep an eye on this week. They are all reporting earnings, and even if you don't have them in your portfolio, they could impact your portfolio one way or another. We're going to take a look at when their earnings are, some things to keep in mind of, and just future price targets. If this is your first time here, make sure to hit the subscribe button. Don't forget to hit the thumbs up, and see you on Monday morning where I will be live streaming here on YouTube at 9 a.m. taking a look at stocks you want me to look at. So let's get started. But before we begin, let's take a listen to today's sponsor. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services The Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. Alright, so the first stock we're going to take a look at is IBM. They are reporting Monday after their close. This is traded under the New York Stock Exchange as ticker IBM, and it's currently sitting at $133. From its all-time highs in the past 6 months, the stock is down about 2%. It currently has a dividend yield of about 5%. That's crazy. And it has a market cap of about $120 billion. The reason we should keep an eye out on IBM is, even though the company is a slow grower right now, they are growing their revenues at crazy levels in the cloud department. And there are a lot of people here that own cloud companies, some of the big guys out there. So seeing how IBM is doing can kind of give us an insight of how the overall market is doing. Like I mentioned, IBM is not expected to grow much, 1.2% on average for the next 3 to 5 years. Right now, there are 5 current analysts looking at IBM. 1 give it a buy, 1 give it a sell, 3 give it a hold. So this is a hold right now. The average price is $131, and that's actually lower than when the price is at right now. Like I said, I'm not a huge fan of IBM right now, but I do want to take a look at how their cloud revenue is doing. The second company is going to be Netflix. Netflix is reporting Tuesday after hours. Let me know in the comments below if you guys want me to do a Netflix video. This is traded under the NASDAQ as ticker NFLX. It's currently at $546. In the past 6 months, the stock is down about 6.8% from its all-time high with a market cap of $242 billion. The main reason to take a look at Netflix is now that things are reopening, it can kind of give us an insight of how these other subscription giants that are out there, how are they doing? Are less people watching Netflix? Are less people subscribing to Netflix? Are people leaving out of Netflix? And this can kind of give us an insight on some of those other streaming giants as well. Netflix is a nice growth stock, expected to grow its revenues 13.8% on average for the next 3 to 5 years. If we take a look at analysts, there are 33 looking at Netflix, 24 give it a buy, 5 give it a hold, and 4 give it a sell, giving it a moderate buy. Price targets for the next 12 months on average is $620, and that's a 13% increase from where the stock is at right now. So nice healthy gains is what analysts believe. The third company we are going to take a look at is Silvergate Capital. For those that are not familiar with Silvergate, they develop solutions for many of the largest fintechs and digital currency companies and investors around the world. Now that we're seeing a lot more companies kind of embrace this cryptocurrency, they might continue to see higher growth. Silvergate is traded under the New York Stock Exchange as ticker SI. It's currently sitting at $133, and from its all-time high, the stock is down almost 25%. with the market cap of about $3.1 billion. Silvergate is a hyper-growth stock. It's expected to grow its revenues 27.5% on average for the next 3 to 5 years. This is a company that's also profitable with a very, very strong balance sheet. Right now, there are about 5 analysts looking at Silvergate. 4 give it a buy, 1 give it a hold, so it's a strong buy. The average price target is about 17.2% from where the stock is at right now, so analysts are a bit bullish on this company. The fourth company we're going to take a look at is Snapchat. They are reporting earnings on Thursday after market. There's not really any fun companies doing Wednesdays for my taste. So Snapchat, the reason investors should keep an eye on, you might have one of the giants in the advertisement business, and Snapchat really focuses in the advertisement world. That's where they make most of their revenue. So seeing how are companies still advertising, what is the level, is it a growth compared to the same time last year, can kind of give us an insight. Right now, Snapchat is traded under the New York Stock Exchange as ticker SNAP. It's currently sitting at $61.25. From its 6 months high, the stock is down about 13%, so it's definitely seen a nice pullback with the market cap of about $92 billion. Snapchat is another hyper growth stock sitting at 30.1% average annual growth rate for the next 3 to 5 years. This is definitely a hyper growth. If we take a look at analysts, there are 36 right now looking at Snapchat. 28 give it a buy, 6 give it a hold, and 2 give it a sell. That's a moderate buy. The average price is $78.34. That's a 27.9% increase from where this current stock is up right now. The final stock we're going to take a look at is Intel Corporation. The reason we should keep an eye on Intel is right now with the overall semiconductor shortage, we're going to get to see some firsthand experience. It's traded under the NASDAQ right now as ticker INTC. It's currently sitting at $64.75, and it has a market cap of $263.68 billion. Another reason to be interested about Intel now with their new CEO, the new plans that they have scheduled for the company, these plans are not going to happen over the next few quarters, right? It's going to take years to implement everything that Intel wants to do, but it's good to see some form of roadmap or of how things are working. From its current all-time highs, the stock has dropped about 5%, mainly after a big competitor has come out in the data center CPU. Intel is not a fast grower, is actually expected to decrease its revenues for the next 3 to 5 years on average of 2.5%. That's actually pretty insane to look at. If we take a look at analysts, there are 31 taking a look at Intel. 13 give it a buy, 10 give it a hold, and 8 give it a sell. So they're all over the place. They're giving it mainly a hold. The average price in the next 12 months is $68.83. And that's about a 6.3 upside from where the stock is at right now. Like I mentioned, I'm more worried about the overall semiconductor and how the business is doing more to individual Intel. And that's what it was with all these companies, right? With all these companies, I don't believe I'm invested in any of them. Yep, I'm not. I just really want to take a look at them to understand how the overall market is doing. So I hope you guys enjoyed today's episode. Like I mentioned, tomorrow, Monday, I will be streaming at 9 a.m. Eastern time. Come in and request stocks you want me to take a look at. So take care, have a good night, and see you next time.